All right. Good morning, everybody. I hope you're having yourselves a fantastic start to your AM here. Happy Tuesday. And yeah, looking like it should be a relatively interesting trading day here again for us. And hopefully, right, we can continue to build some momentum and, yeah, keep compounding what has been a really nice, we'll say, start to the Q4 kind of trading period. It's my favorite time of the year, so very excited to see what's in store here and how we can go from there. Obviously, yesterday was a very strong trading day, and not to complain about that, not at all. But it's about making sure that we're not bringing that baggage right into today. So no like ego in oh, I'm gonna have another day like today. No feeling bad about if a loss happens and then trying to like revenge trade and make everything back all in one go. Doesn't really work like that, right? We made money yesterday, not necessarily because of like us wanting it more, right? We made money because we traded our system, we stuck to our rules, and we focused on losing small. And as the market started to move and we got some volatility, we were very well positioned, right, with our position sizing to be able to take advantage of any of those types of even small moves. So today is very much about looking to do more of the same. That's really what my objective is here this morning. Hopefully, right, we can get ourselves a strong look or two or three or 30, maybe not 30, but hopeful, right, that gives us a little bit of an edge here today, and we can go from there. Fundamentally, right, the reason why yesterday was a successful day or such a successful day was because we focused on getting out of trades that weren't behaving how we expected. We focused on closing as P&L was increasing, and we focused on losing really small. So nothing there was about wanting to make big money or needing X or Y or Z. It was just about sticking to the process, sticking to the rules, and then basically not getting in the way, right, when the market did actually eventually want to move. So for me, more of the same here today. That's what the doctor has ordered. And hopefully, right, we can put ourselves in a situation where it is easy to be successful. We do have a little bit of a busier economic calendar here today. So we've got a bunch of Fed speak, right, kind of all throughout the day. We've got no 10 a.m. data, right? So again, that's going to slow things down here just a little bit. But markets are going into Fed minutes here tomorrow, generally the day before anything formal Fed-wise. Creates a little bit of an interesting environment. We're seeing much less of a ripper overnight market, right, compared to yesterday. So that potentially also then sets up an environment where we're able to maybe get a setup slightly earlier on in the day. And I'm going to be very optimistic, right, that that's hopefully going to be the case. But with that being said, yeah, let's start mapping things out. Let's figure out what we want to do here this AM. And yeah, let's put ourselves in a situation where it's easy to be green. So ES, right, we've got a little inside bar here. Formal consolidation there yesterday. And fine. And then this morning, right, we're still looking for between 6,800 is pretty much where we're at right now. So we're going to be looking at 6,810 and beyond. And then to the downside, still looking at that 70. So not much needs to change from our levels perspective. All right, on NQ, here we've got green candle, green volume yesterday, and then this morning, right, we're gapping up. So we're looking at a 2 out of 3 to the upside, right, without volume. So far, that's the missing ingredient. And then to the upside here, 25.3, kind of our starting point. We're already there, we'll call it, or that should be taken care of by the indicator. So then 25.4 is going to be where we push upwards towards. Sweet. And then to the downside, we're just going to go 25.1. Awesome. Okay, CL. Green candle, decreasing volume, gap down. Green candle, decreasing volume, gap down. So 1 for 3. I don't know why I had to say that twice. Target here would be 62. Again, that level's not changing from yesterday. And then to the downside, we're targeting 60.50. Main thing here, right? Pretty decent move already lower. So we're just going to be restricted, right, by that 5% limit down from open. So approximately there. So 5% is going to be 58.66 approximately. So I think just stalling out there at 59 makes enough sense for me. Okay, Apple inside bar. Tesla, green candle, decreasing volume, gap up. So 1 for 3 to the upside. Microsoft, 2 out of 3 with volume. Amazon, red candle, technically increasing volume, and then a gap up. So we'll call this a weak 2 out of 3. A lot of that looks like a dip buy effectively, right? NVIDIA, Doji on increasing volume. So we'll call that a 3 for 3 to the upside. AMD, the sociopath from yesterday. Probably not worth putting too much stock into that. Still very much trending to the upside here. But we'll call this a 2 out of 3 to the downside with volume. And it's just setting up as an inside bar. Excuse me. Seem to have picked up a bit of a cough, which is very disgusting. Meta, 3 for 3 to the upside. Netflix, inside bar, big gap up. Google, 1 for 3. And then VIX 16.22. So significantly lower than what we had there yesterday. So probably expecting it to be, I don't want to say less volatile, but we're not expecting a massive range by any means. If we can get a breakout and continuation and it's supposed to be low volatility, then getting that pump and move should give us quite a bit of follow through. How's everyone feeling this morning? Everyone feeling sharp? Beautiful. Love that focus, Earl. 100% the right thing to do. Yeah, kind of felt like I got through that prep really quickly this morning. Nice, Mike. Hope you had yourself a great little weekend away. All right, guys. So I'm just going to go grab my laptop, my notebook, and yeah, we'll get set up here for what should hopefully be a good trading day. I'll be back in like 2 minutes. Give me a sec. %, Chris. So, like, if you keep your loser small and you find scenarios where you have asymmetric upside in your trading, which is what we're trying to filter out, basically a lot of trades to make sure that we do get that, then, we can be correct on 20% of our trades, right? 20% of our ideas and still make a lot of money. That then creates a ton of margin for error, right? Where you can be an idiot strategy wise and still be exceptionally profitable. Now, that advantage or that edge effectively evaporates, right? Once you start to attach your ego to the size of your losses and you take bigger and bigger ones. So the easiest way to win as a trader is to be the best loser possible, as strange as that sounds, and really important, right? That we put our energy and focus on that. Now, that might mean that sometimes, right, the stream is a little bit chaotic and tough to follow and all these sort of things, just because, we'll be in a trade for 30 seconds, right, before we get out. But I would really challenge everyone to embrace that mindset and to really focus on losing small. And the more and more you can do that, the better things are going to go for you. And once you're finding a little bit of that momentum, then you're going to be able to put yourself into a very, very good situation. And you'll see how powerful that compounding effect is with trading. So we're trying to avoid compounding, mistakes, negative decisions, um, and going from there. And if we can avoid basically making our obvious mistakes, then our easy wins pay us for, weeks at a time. And that's really what our objective is. What we're going for. It's what we're cheering for. Sounds good, Robert. Yeah, the 5 minutes you mentioned was very, very suspicious, but glad it's looking sharp here today. All right, so we got about 1 minute here till market open. All right, so let's get after it here. Team, 9 seconds to go. And again, I'm going to put my energy and focus into my one true love, NQ. And hopefully she treats me well. All right, here we go. So main thing we want to see here this morning, right, is a reasonable amount of enthusiasm. So either good size opening range, right, good size volume profile, or ideally both. We'll see how that comes together. And yeah, hopefully it's a smooth day. All right, so today is what, October 7th? So not a huge range so far. Pretty small, based on NQ. That would give us, profit targets of like 20 or 40 points away. So that would be maybe a little bit more challenging. Generally, what I want to see with NQ, same with ES, is I want there to be an expectation of us being able to get approximately a one handle move. So one handle on NQ is 65 points. On ES, it's 15 points. So that would mean that you're ideally looking for an opening range, right, of 7.5 points on ES, and then I don't know, 32.5 points, right, on NQ. It's kind of like the sweet spot where you'd like. Now, it's starting out from like a limited form of compression. Wouldn't necessarily be a bad thing either, but just something to be aware of here. Okay, a little bit better. just about at that one handle approximate range now. ES is there, which I don't know. Maybe one day I'll fall back in love with ES, but kind of an interesting close. Bit of a divergence between the indexes, which I generally don't like to see, right? When we're seeing such a sharp divergence like that, and maybe it's a little bit too early to call super sharp, but that's generally an indication, right, of choppy market conditions or a choppy market environment versus a trending one. That might just slow me down here just a little bit. And so just being patient. There's no rush to do anything here yet. We're wanting to see these stories get consistent, which requires a little bit of just a little bit of slowing down here. Again, guys, not a bad thing. Like, yeah, not a bad thing. A little bit better from NQ, at least removes some of that divergence. This I don't like. Why is there such a like appears to be a gap down on the CL? I would have expected it to close or open up this new candle right where the previous one closed. It opened up a penny below, which probably is a trading view issue, but it's annoying. Same thing happened on NQ. Same thing happened on ES, right? So there's like it missed or skipped a I don't know, a second of data or something like that. Not a huge deal. It just is a bit annoying. See if we can get a nice now breakout with volume here through these highs. Getting an increasing volume standard here probably shouldn't be too crazy. I seem to have picked up a cough, which is really sad. When I was flying back from London, the lady I was sitting beside, or was like in the booth next to me on the plane or whatever you want to call it, she was coughing so bad, and yeah, I think I might have gotten something from her, which is so frustrating. Yeah, unfortunately, I've got a lot of stuff I still got to do before Christmas. Annoying. I know, Patrick. This smooth brain ape can't help himself. I don't fly first. I fly business, but I only do it because I got so many airline points. Oh, like I run everything through or my business right through DTR. Everything gets run through a business credit card. And so I collect points like Jennifer Lopez collects engagement rings. And on those long haul flights, it's pretty nice. Oh, Kobe, that's disgusting. Oh, that's literally like nightmare fuel. I've not heard of the secret to mastering trading patience, Earl. That's one I haven't heard of. And I hope it's not COVID. I had the COVID when I came back from Spain, and I was literally sick for 2 weeks, like disgustingly sick for 2 weeks. Sickest I've ever been, probably my entire life. So hopefully it's not that, but who knows? You should have heard me in the stream. those 2 weeks. I sounded like my lung had collapsed. Oh yeah, Sean, it is really really nice. Like I'm pretty cheap, for lack of a term. I'm not very good at spending money. So it's not something I'd ever do for myself if I didn't have the points. But having them kind of forces your hand, and it's a nice little problem to have. Still no increasing volume here, right, on ES or NQ. Actually, kind of like suspicious how quickly it's dried up on ES. And this is maybe trying to get into the too much information territory. But when I was like, so I had a layover in Seattle, which was really annoying. But the flight getting there was like an hour delayed. And so I had, I don't know, 15 minutes maybe to get through security and then get to my next flight before it boarded or before the doors closed. And I had to like sprint through the airport. And I 100% accidentally tripped someone with my bag. And I didn't have the strength of human character to look back and make sure they were okay. So if something bad happens to me here today, we'll know it's karma. Yeah. Maybe CL here. I'd probably want to see CL break and hold above 73, right? Because otherwise it feels a little bit too much like a double top. I think it's unlikely that we're going to get it here on this candle. Okay, so yeah, starting to sell off here a little bit. That divergence we talked about has kind of melted away into the background a bit. but we're not having any high conviction signals here yet. So this remains an opportunity to be pretty patient. All right, so like a bearish engulfing candle, bearish engulfing on volume would be pretty interesting here. Again, we'd probably want to see it close under like 38, but with say 90 seconds to go on this bar, we should get increasing volume here. It would be, excuse me, a huge upset if we didn't. Question is, will we get a strong enough signal? Okay, CL could also be in play. There's given us that breakout over that 73 target we talked about. It's already increasing outlier. So if this thing can close well, that would be worth watching too. Again, CL is always kind of, I call it the backup plan, right? It's not my preferred instrument to trade. It can be a little bit temperamental sometimes. I for sure would rather ES or NQ if that's what it came to. I mean, that was yesterday's story for sure. It's why we saw such a big overnight move in NQ, right? So pretty much all the price action yesterday, right, or the vast majority of the price action yesterday, right, happened overnight. And so that was driven a lot by the AMD news. As for today, I think that's probably going to be less of a factor. But yesterday, for sure, it was. Like AMD opened up, I don't know, like 25% or something, which is pretty nuts. Yeah, so this would theoretically be setting up here. Now, would like to see the fake out first, right? That would be the key element here. Like I really have enjoyed waiting for the fake outs. It's been really nice. So more of the same effectively, right? I guess two things I love about the fake out entry. One, if you're green, you're pretty much green right away, which I think is fantastic. The other thing is you're able to keep your sizing right bigger because your risk is tighter. You know, finding scenarios in NQ where I've got less than 10 points of risk is so beautiful. That feels like it really matches my core trading philosophy very well, which I do enjoy. So let's see. Again, CL, I want to see the fake out first. I'm going to struggle to trade this if it just is a straight line higher. And guys, if we like don't get a trade here today, no big deal, right? Yesterday we made enough money to pay for a month's worth of trading. Obviously, I don't want to stop, right? I'm not saying we got to be on our hands here and do nothing. But we shouldn't feel any extra pressure here today, right, to make a decision. Okay, this has a chance to go increasing volume here too, which would be pretty nice. And then again, if we do get that breakout set up, like to see the fake out happen first. Yeah, 100% Earl. Or Derek, don't swing at the slider. And that's kind of the cool thing about trading, right? I can sit there and stand in the batter's box and I can see 1,000 pitches go my way and never have to swing, right? If I don't swing, I can't strike out. So we do technically have a little downside setup here, which is interesting. So again, would like to see the fake out first. Target there would be that. For now, we'd be looking at the pullback technique. So stop loss would be like 54. But I want to see bulls fail first, right? Bulls fail first. So either a little fake out above 53 or I don't know, maybe this goes like inside bar and then fake out breakdown, something like that. So we're trying to get a setup, but we got to be a little bit patient here. We still want to see price action fail. And the reason we want to see price action fail, right, is it gives us basically like, I call it fake out insurance. I think that's probably the best way to look at it, where at the very least, right, if I'm buying when bulls in this context are at their most exhausted, I should be able to get a little bit of a buffer from my entry right away, where if my thesis isn't correct, right, or my directional bet isn't correct, my entry timing was so good that I can effectively still end up green without necessarily picking the direction of the market correctly. And that would be a bit of a cheat code, I think. Mm. Okay, so still no fake out here. Still that little inside bar, but it is setting up pretty well. AMD at 214, opened up at 216. Base expectation, though, here today on AMD, right, that this is going to be an inside bar day. It's got so much work to do to break out in either direction that I think it'd be extremely unlikely that it happens here today. No, so far pretty thin, especially on ES. The volume on ES is pretty pathetic. So still no rush here. Again, we want to see for now, at least until we make a lower low, a little failed move above that 53 handle-ish. So nice little breakout, but not nearly enough volume. It's actually technically even decreasing relative to the previous bar, and it's not outlier, so I can't take a stab there. CL, I mean, this is obviously where the paranoia comes from. Again, we'll be patient there. Is that your team, Nick? Are you a Brewers fan? Makes sense. Yeah. So the opening range is just whatever time frame it's on, right? So if I'm on the 3 min time frame, the opening range is the first candle of the 3 min. If I'm on the 5 min, it's the first candle, first 5 min candle. If I'm on the 10 min, right, it's the first 10 min candle. So it's unique to each time frame. And still, we've not missed out on anything here yet. Let's see if that 53 wants to touch here, right? That's 6 points away. So I'm watching this pretty carefully. And like, I don't know, I'll say fingers crossed. I'd love a one and done day here. That would be probably the best case scenario. There's that little fake out. So potentially in business here. There's waiting now a little bit, right? We're wanting to see a pretty aggressive rejection or reaction to it. So far, I haven't really seen that like elevator down rejection, right? So this is maybe not behaving as expected. This could be now kind of turning into a breakout candle. CL, we've not missed on anything, so we've done a pretty good job here so far, avoiding dumb trades. So you see how that was pulling back, right? That was kind of pulling back step by step instead of looking like it kind of hit a wall. That's a little bit better. We'll put stop at 65. Problem with this, though, I'd say this volume probably scares me, right? A little bit too much. I'm going to wait. It for sure looks like a fake out, but I would say the way that price action is behaving and then the volume associated with that price action is not super indicative of a fake out. So I'd rather wait. Yeah, he's doing okay. Uh, Basically, the vet said it was just like overuse. He's fine. He's a little drama queen, my doggy. So very wiki price action here so far, right? I think the 5 min shows it better than the 3 min, but no rush to do anything yet. I don't think we've got clean price action so far. Okay, so this could be setting up on the 5 min, right? Which would be interesting. Well, just look at the wicks, right? If I were to look at this on the levels of bullishness or levels of bearishness, right? These aren't looking like very high conviction candles, right? This is probably the strongest candle of the day, and then it immediately fakes out. So it's just contextual, right? Strong price action would have strong volume and strong candle shapes. We don't have particularly super strong volume or super strong candle shapes. So it's just contextual. I mean, this 5 min looking better, right? It's a fake out above previous high day. So that's pretty interesting. Reasonable looking candle shape. Looks like third biggest volume bar of the day. Pretty interesting. And I always would like to see bulls fail here, right? In their attempt to reclaim control. You're looking like something like this as a base, right? Starting point. Not going to draw out a reference price, guys, until I see the fake out. And just one comment, right? So a lot of people have been asking me reference price. How do I come up with it? What's the whatever behind it? People are just overthinking it, guys. All I'm doing here is I'm looking to the left. Where have I seen price action stall? So today, for example, right, we've seen eyes here, everything above this blue line, right? We're seeing rejections. So that would be it, right? It's just where's the first point where I think that price action could stall, and then I draw it out there. The actual location of the reference price is not really that important. It really doesn't mean that much. All it is, right, is it gives me a yes or no outcome, right? So good entry is above the reference price, bad entry is below the reference price. And that's really all I'm trying to work towards, right? So I'm trying to give myself something binary to work towards. So don't overthink it, guys, right? Like the actual location of where you draw it, not a big deal, doesn't really make a difference, right? I could draw it there and it would still be a good thing. I could draw it here and it could still be a good thing. So don't overthink that. It's just how can I give myself a decision that requires zero emotion, right? Above is good, below is bad. If I'm bearish, right? If I'm bullish, below is good, above is bad. That's it. So I'm just trying to give myself a very easy binary decision. And it's where's the first place, right, that I see or think price action will go up towards. And I feel pretty good about avoiding this temperamental prick of CL. Okay, there's that little breakdown on what would be now the aggressive entry technique. And so reference price, right? Just low of confirmation. I want to see how this thing behaves here first. Again, haven't really seen that bullish failure post confirmation. So still going to wait. All right, I'm going to go fill up my cup of coffee. I'll be back in a second. So 250 would be the stop, right? But we're not quite ready for that yet. So just young dude, right? Stop losses are either high of my confirmation candle or what would be high of my entry candle. So I should be able to work backwards to find that pretty easily. Good volume here. Pretty good. Same thing with ES. ES might be more tradable potentially. Like if you go into the start here section of the Discord, you want to look up the video called pullback technique versus aggressive entry technique. That would be the thing to watch. All right, so let's see here. Still no lower low. $28,791. There's a little bit more of a pronounced fake out to the downside on ES. I generally hate to see when the first move is lower and then immediate recovery. That's a little bit suspicious. So again, we'd still be setting up like this for now. And I'm not interested yet, guys, on an entry above 236. I still want to see that bullish failure. Otherwise, right, my base assumption here is chop or indecision, right? Ooh. Yeah, so let's see if we get that little fake out above 250, right? That's what we're looking for here. And that can take more than one candle, no big deal. I don't really know what that question means, Axis. You're going to have to be more specific than that. Okay, but again, I don't know what that means, man. Yeah, when you joined your trial, you were sent a Whoop link that gets you access to the Discord for 7 days. You were emailed that when you joined your trial. Yeah, let's see. Right, we're 10 points away from the fake out spot. Yeah, so still an inside bar here, right? There's nothing's changed yet. I'd like to see it move that extra 10 points. I'd be able to get a nice tight risk reward. Okay, let's watch here carefully. Let's see if this is the fake out now. Okay, so we'll be looking at a 253, called 254 stop loss on this short. Excuse me. See, how did it stop? Light risk here. Hey guys, I am in average price 249.75 short, stop loss 254, and I have 5 contracts on this. Oh, just got stopped out. This might set up again here. And if I'm not right away, I want to be out right away. So quick in and out there. That was what, 15 seconds. Let's see if this thing wants to behave appropriately here again. There'll be a 258 stop loss this time. Oh, mean. Maybe just a little bit early on that fake out, which is tough. That's okay. Not a big deal. No, the YouTube is not delayed by 1 minute, Ian. It is not. The YouTube delay is 3 seconds. Please make sure that you have the live button ticked and that your view, right, is at its most recent. It is not a 1 minute delay. Guys, I feel like I talk about this latency every single day, and it's always because the live button isn't ticked or because you're not setting it up correctly. There is not a 1 minute delay in YouTube. Stop. It drives me insane. Nice work, Mark. Yeah, but it's all explained in their resources, welcome resources when they join. Yeah, 100%, Tyler. So Tyler saying, if I listen to both, I think that the delay is less than half a second. All right, so we have a nice little rejection thesis here. Be looking like something like this. So you'd be looking at a 245 stop loss here. All right, so we get a gentle pullback now. We're going a little bit smaller sizing, right, than last time. Oh, maybe not. Okay, guys, I am in average price 239.25, 239.25 short. All right, 3 contracts. Let's see. I've just been stopped out on that again. Maybe my entry timing is a little bit sloppy. I need to be a 247 stop. Oh, potentially try this again. 248, we'll call it. See if it wants to make a higher high first. Been unlucky with that first one. 249 would have been such a good price right now. No biggie. Oh, so far down about called $750 here. Not too bad. Do something like this, maybe that would be interesting too. 242 stop loss. 2. Okay, watching carefully here. Remember, guys, your primary job as a trader is to control the variables you can control. No one is coming to save you, right? So you have to be the one who's making sure that your details are sharp. You're just going to show up and you're going to hope that good things happen. It's not going to be like that, right? Go through the resources, watch the videos, use the material, make sure you're set up to actually execute things properly. Because if you're not, even if we make money, you're going to find a way to lose. So don't be that self-sabotaging asshole. Spend the 30 minutes it takes, right, to get your details sharp and then make sure they actually are. Because, like I said, no one is coming to save you. You have to be responsible for your own success. And little things like understanding the latency of the YouTube stream or understanding how to place an order or making sure that you know how to get to live or you know where to ask a question. These are all very basic little details that are not technically difficult to understand. We need to make sure that they are sharp. Right? Everything I do on a day-to-day basis inside the stream is what I think is best for me and my account, right? So you need to have that same mindset and that same approach to your decisions and to understand the risks that you're taking or the decisions that you're making. If you choose to ignore those things, you're going to struggle and you're going to feel like the game is rigged against you when that doesn't need to be the case. So, like, please, guys, nothing here is particularly complicated from a technical perspective to set up. Watching a live YouTube video is not particularly challenging. So get your ducks in a row because it'll make a huge difference. And complaining instead of fixing it doesn't fix it. Especially complaining about something that isn't fundamentally true. We're still trying to find a clean entry here somewhere if we can get one. Struggling a little bit to find it. Still a little bit gutted. I mean, both of our initial entries, 239.75, 249.75. Somehow lost money on both of them. And we're 20 and 10 points lower, which is kind of funny, but is what it is. Pretty light volume on this. Still some interest here. I mean, bid minus 0 will usually get filled. You know, do you understand what bid minus 1 means? You understand what that means? Yeah, you're coming in one tick lower than the current price. Well, personally, I just have mine set to plus 0, minus 0. Stop here would be like 243. And now it would be 236. And this is still my confirmation, right? This 1010. So now it's just about finding the best possible entry price I can. Still watching here, still watching. Shaken out of that first trade. That is crazy. Nice work, Mike. Oh, you're in great shape. Too aggressive. Let's see if we can get this maybe on the 2 min here. And I'd be targeting 100. Good volume. Very good rejection. All right, so stop loss would be 220. Hey guys, I am in average price 215 on the dot, 215 on the dot. Stop loss 220. And I have 5 contracts here. Watching this, micromanaging this just for a second. Not a perfect entry. Okay, better. All right, let's see if this thing can flush. Would like to see probably a little bit more of an aggressive move. Don't like that too much. A little bit of a stall out at like 212. Let's see if it can go. I'm a little bit early on this, which I don't like. So I've closed this trade, guys. I have closed this trade, closed it before stop loss, exit price 217. Minus $200 on that. Good decision. I'm sitting at about $1,000 down here on the day. Still very much within striking distance. Yeah, entry just felt early there. Right away, pretty much. That's now looking like a fake out above that 3-min. So far losses 425, 327, and 211. Nope. I'm still well within my max loss number. I've got no reason to stop, and I'm happy to keep taking these small losses. $232. Like guys, like losing trades is not a big deal, right? It's only a big deal if you make it a big deal. But lose a lot. Like it should not be something that scares you. Yeah, no offense, Caxius. You don't know what you're talking about compared to what my strategy is. This was my confirmation, right? So go through the material. Easy to make that type of comment in hindsight, but I trade the same technique, same style every single way. I'm looking for the tightest risk reward ratios that I can get. So that means I'm going to get stopped out on small 5-point losses or 2-point losses. I'm totally okay with that. So stay in your lane, man. Go through the material, read the strategy, actually learn what you're seeing in front of you, and don't just chat bullshit because it's not helpful. Guys, we're back in business here. Right? Setup, breakout to the opening range, confirmation, increasing outlier volume. Nice work, Joel. Congratulations. It's a fantastic win. Well done. Yeah, what's up, Rusty? Yeah. Yeah, again, another really good volume profile here. So let's see if we can get a tight risk reward. Really good volume. Okay, so watch for this little fake out above 209 now, right? I don't think I can do that. And 5-min's looking really strong. Second largest volume bar of the day. Very impressive. 20 seconds to go. Little bit surprised that yeah, all 3 entries have kind of been a bit shit or a bit off, which is a bit frustrating, but that's okay. Really big deal. And the objective here, right, is to take small losses so that if a move does develop, I have the ammo to take more than one shot, right? Why we're focusing on losing small. That's why we focus on our position sizing so much. Why we trade the way that we do. Here's our opportunity for that fake out. Let's see. Okay, there's that initial higher high. Now we want to see basically get rejected like a wall. Stop loss, we'll call it like 212 for now. All right, guys, I am in average price 209.75, 5 contracts. Stop loss 212. Pretty much green right away. That was a perfect entry. Sorry for those who couldn't catch it, but there's your $1,000. Now let's see if this thing can break down. So again, right? We focus on losing small because that is literally all it takes to be green, right? That's literally all it takes. So there's 1,300. So like our system is designed, right, to give us a lot of margin for error. Like I don't need to be complicated with my technique, right? I can go 1 for 4 and still be really green. And that's the most important thing, right? Have margin for error. I'm making it easy for myself to be profitable. So now let's see if this thing can keep breaking down here. Like we had 3 points of risk on that trade. That's awesome. All right, so let's see if this thing keep breaking down. Not enough separation yet to think about pyramiding. I'd like to see more separation away from that 200, right? Like a fake out above is cool, but now we want to see it really break down, separate, give us good follow through, and pay us. There we go. That's going to be pushing 2K. So let's see if this thing's got legs for one more reasonable flush. So far, so good, though, team. So far, so good. Does everyone understand the method to the madness here? Right? We're making our losses irrelevant so that our wins can be relevant. Okay, average price, guys, now is 201. Average price now is 201. And let's see if this thing can break down and really start to flush. Push, push, push. I'm a little bit surprised by the lack of enthusiasm here away from that separation. That makes me maybe just a tad nervous. So let's see if this thing can crack. But it's taken longer than it probably should. So see if we can get back down towards those 80s. Okay, one flush here. Come on, baby. All right, beautiful. What's the time? 7:46. Still pretty early. A little bit bouncier than I want. All right, guys, I'm out of this trade. I am out of this trade. Just locking in and protecting a green day. Close that at 98.25. Let's see if this thing wants to maybe reset back up. And so that was 11:27. Still puts me good on the day. Maybe could have done a little bit better protecting that or being aggressive with my take profit, but wasn't. Fine. Is now back to our original entry price. So this might set back up again here for us for another attempt. I probably want to try this on a longer time frame. Truth be told, how are you down 1900? That makes 0 sense. That makes 0 sense. What do you mean forgot to cancel a stop loss order? Come on, man. Control the variables you can't control. That is unacceptable. Unacceptable. Hey, nice to hear that, James. Great to hear you're up nicely green. It's a good day. We're still in business here, guys. So, Chris, right, when you pyramid in, you're telling yourself, I need to get out before that happens. Yeah, you can't be setting your stop loss to be above your pyramid price. Cannot do that. Guys, we really need to tighten up these details. Too many sloppy comments about execution. Not acceptable. None of these trades have moved so fast that you didn't have time to lock in a green day. Only reason you wouldn't have is because of greed. So tighten your shit up, guys. Completely unacceptable. Well done, Charles. Very well done. Yeah, but I didn't get stopped out on 2 of my trades so far, right, Chris? So one I closed for a 2-point loss. The other one I just closed for a net $1,000 win. So if you're saying you're following my trades, you're not, right? Well done, Earl. Like there was no reason to have just gone stopped out on that one where you pyramid. Right? There's no reason why that should have happened. When you're pyramiding, you put your stop loss to be better than your entry price. So worst case scenario, you finish protecting a win. Yeah, absolutely, Charles. That's absolutely the move. I'm sitting at what, about 150 bucks on the day, right? Not a monster day by any means, but good execution, right? Good managing of my positions, and it's allowed me to finish green. But Chris, if you pyramided into that position, you were for sure green on the day at some point in that trade. It is greedy to not take that win, right? That's what I mean by greed. So following my stop losses, that's a very deceptive comment. On 50% of my trades, I've not gotten stopped out because I've closed them before the stop loss happens. Okay, so here's possibly another fake out opportunity here for us. Right, this is my confirmation. We can get a bit of separation here. The stop would be like 195-ish for now. Really good job, Derek. Really good job. Exactly what you can ask for. Okay, guys, I am back in short 192.25, stop loss 195. There's your retest. Okay, see if this thing can keep flushing here. 192.25, 192.25 entry, right? Don't like that pullback. See if they can flush. There we go. There we go. There's 1,000, 13. $14, $15, $16. All right, guys, I'm out. Closed. I am out of this trade at 180.25. That's trade number 5 on the day. What did I just do? So 192 to 180.25. For $1,200. Okay. So now sitting on 1349. And we'll keep trying to catch the smooth move lower here if we can. Hey, Tyler, my word of advice, right, is learning to trust the system happens, excuse me, with that repetition, right? So sometimes you have to just get used to closing as P&L is increasing, build up a little bit of that buffer in both your account and your mind. And then all of a sudden, it's going to be a little bit easier to hold those trades for longer. So I've got no like fundamental issue with you closing your trade where you did, but I want you to write down in your journal why you felt the panic basically to close that, and what you think triggered that decision. So then at the very least, right, next time that opportunity shows up, you have the chance to be able to make a different decision. Appreciate that, Earl. Yeah, nice little trading day here so far, right? We've just stuck to our system. We've traded our rules. We've played the numbers game, and that is literally all we can do. Yeah, Tyler. So again, like don't put too much pressure on yourself, right? It's like you're learning a new strategy. It's kind of like you're trying to learn Chinese. So don't worry about it too much, right? Just force yourself to put yourself in a situation where you can learn from those decisions, and then to go from there. For those of you who missed those trades, right? And let's just pretend you didn't have any technical issues, right? Or any like trading view issues. The price retested both times each time, right? So it retested my 192 and it retested that 209.75. So it retested within the first 30 seconds or so, right? Post entry. Yeah, me too, Derek. I'm really enjoying it as well. So, like, what I want you guys to pay attention to, right, is hear my price and then just be watching. Have your, you can even do a market order if you want, but just wait until the price is my price or better, then click submit. Nice work, Chris. What was your pyramid price on that one too soon ago? Was it trade number 3 or trade number 4? Which trade was it though, Chris? Which trade? And again, right? We're just trying to stack up the odds in our favor so that the math works out, right? That's the reason we trade this way. I don't care about my win rate. My win rate is honestly so irrelevant. So for me, it doesn't matter, right? I care about everything else pretty much. And I think the sooner that we can stop obsessing over win rate, so trade number 4, Chris. Taking 5 trades here so far. So is it 1, 2, 3, or 4 or 5? Do you know what price you pyramided in at? Okay, I'm going to focus on this. I don't have time to deal with this bullshit right now. So we're going to focus at 25, right? 25.1 is our target here. Right? Confirmation is a high vol breakout through low of day. Stop loss would be, say, 174.50 for now. This thing might be moving without giving me a pullback opportunity. That's fine. I'm not going to chase this. Just reset up on the 5-min. So Ant-Man, right? I am never exceeding $500 of max risk on a trade, right? So every trade I take, I am just sizing up until I'm as close to that $500 max risk, right? So it's every trade is the same amount of dollars risked, but the tighter stop loss I have, right, the more contracts I can buy. If I'm have a 3-point stop loss, 5 contracts, doesn't matter about the buffer. I'm still less than a $500 max loss. Bit of a waterfall here of price action now. So every decision is, am I within my max loss number? Yes. How much space do I have within my max loss number? Can I increase my sizing? Yes. If I can, I'll keep increasing my contracts up until I have that $500 worth of risk. Now, if you have a different max loss number that breaks you, sweet. Use that number, right? But for myself personally, I will not take a trade if my loss or my risk exceeds $500. That is the rule. So it's less about number of contracts, it's about dollars risked. And that's what I care about. That makes sense? It's not seemingly wanting to give me any entries here on these pullbacks. We got to be quick, right? We're going to have to be pretty quick here. Bit unlucky to have gotten shaked out before it makes these big breakdowns, but hey, not the end of the world. So my position sizing is never random, right? I'm not just saying, "Ooh, I've got a number in my head. Let me do that." It's, "Oh, I can risk $500. Sweet. Let me risk $500. That's my max loss number." And that's it. Right? So again, I showed you guys this yesterday. I'll show you again. But you just fill in your numbers inside your trading view, and then you'll see what your dollar risk figure is here, right? So look at that, right? That's what you should be caring about. But for now, guys, I don't have time to help you with your risk management or these sort of things. You can take care of that on your own side. I really need to focus on continuing to trade. So let's be focused here, please. These are things that we can solve outside of trading hours. And these are all variables that are consistent and have been consistent for like 18 months. So let's make sure we're coming prepared, controlling the variables we can't control, and not hoping to get bailed out mid-trade. Because it's a fucking pain in the ass. Nice work, John. 4,200 and 4,300 bucks on the day. Why the difference? Oh, so just a little bit of slippage. Okay. Awesome. Congratulations. Is that pass your eval then? Let's go. Congratulations. So don't force it now, right? Stick to your system, play your rules. Don't do anything stupid. Maybe starting to be a bit worried that this is like a capitulation type move. You're like 200 bucks away, 800 bucks away from passing. Don't force it, please, right? Yeah. Guys, the most important thing that you can figure out before you enter a trade is the risk tolerance that you're comfortable taking, right? What do you think is the number that breaks you or puts you on edge or makes you anxious or does whatever? And then it is your job to make sure that you are never exceeding that number. So by default, the number that I use with everyone here is 500 bucks. If your number is less than that, cool. Learn how to make those adjustments. It is not difficult. If it's more than that, cool. Learn how to make those adjustments. It's not difficult, but it is something that you need to be extremely selfish about, right? Because everyone has a different number that breaks them. And you need to be honest with yourself over what that is and know how to manage yourself to get to that point. Let's go, John. 6 days in a row, all over 1K. Nice work. Yeah, Rusty, exactly. So you make a lot of money because you've been very selfish in your desire to get better and to make these things your own. And that is, yeah, had a tremendous impact on your bottom line, right? Like I say this all the time, guys. Trading is funny because we're all in this together by ourselves. So everyone is going to have a slightly different reaction to price action. Everyone's going to have a slightly different reaction to a loss. Everyone's going to have a slightly different reaction to a pullback. And you have to study your own personal reactions there to learn how to fix them and get over them, right? Because I'm not going to have the same psychological breakdown as Rusty is, and Rusty's not going to have the same psychological triggers as me. And so if you want to effectively copy my trading, you need to learn how to not sabotage yourself so you actually can do it. It's very important. Because we're getting stuffed here at that trend line a little bit. A little bit too fast of a movement so far. Yeah, guys, just as like a word of warning, right? I cannot bail out your risk management regardless of how well I trade, right? It can't. So, risk management and controlling your psychology and being deliberate is a proactive, not reactive process. You choose how you feel in a trade before you enter it. So take that responsibility seriously because it will change your life if you actually hold yourself accountable to those changes. And that's a guarantee. Now, if you skip or you choose to ignore those lessons or ignore that work or to do whatever, then you're always going to be chasing. You're always going to be anxious. You're always going to feel like the game is rigged against you because you're passing on that accountability to something else. You're giving up that control. And I promise you, you will not make any money long term if you choose to pass on the accountability to anyone else but yourself. Guaranteed. And I know sometimes I come up as a grumpy prick when I preach and I, uh, yeah, chastise you guys for that, but it is literally the most important thing in your trading. The more that you are selfish about your position sizing, the more that you understand how those calculations work, the more that you are proactive in those things, the sooner you will start to make the money that you are trying to make by skipping steps. So, I can't stress it enough. It is literally the most important thing you could decide to commit to. And like I said, it is not fundamentally difficult. It just requires you to be deliberate. Let's go. How many evals did you pass? Let's go. 5 evals passed today. Congratulations. Awesome work. When did you start them? How long ago? Beautiful. So less than a week. Or are you talking about where's my calendar here? Friday the 3rd or Friday the 26th? Beautiful. So you passed your eval that quickly just by following your rules, sticking to your risk, and being a good loser. If that isn't a proof of concept, I don't know what is. Awesome. Much congratulations. Yeah, there is a separate chat inside Discord. I mean, guys, it doesn't make a difference, right? Let's go, Blue Cable Marketing. Congratulations. $4,200 on the day is fantastic. So 1349.35 on the day here so far. I don't know if I should place another trade. Pretty good day. The risk numbers have also kind of elongated here a little bit. I do not want. VIX 16.81 is actually not really much of a change considering the sell-off, which I think is pretty interesting. How's everyone feeling? Everyone green? Let's go, Jeanette. How much? Let's go, Kobe. Very well done. 4,200. Let's go. Jake, almost 900. Mikey, 1,200. Tony, 1,400, almost 1,500. Congratulations, team. That is fantastic. Charles, almost 1,800. Chris, 1,000. Let's go, guys. Fantastic work. John, almost 16. Like I say, team, I'm the happiest here as an educator on the days where you guys outperform my P&L. That is tremendously fantastic. Let's go, Hugo. Nice work. $3,500. Mikey, 1,200. And you see how getting patient and slowing down actually speeds up your P&L? Makes a huge difference, right? Makes a huge, huge, huge difference. I think I'm probably done. Any questions here, team? Really hard to say, right? So without being able to see what price was and what price you submitted your order at, I can't really make a comment. There's too many variables there. So like any statement I make would be just based on a lot of assumptions, which I don't think would be very fair. Right? So like my base guess would be that price basically just moved fast. And so between clicking submit at, bid -0 and executing, when it clicked, it no longer was within striking distance, right, of let's say 111.30. It was like 111 or something like that. And so just the latency between submitting your order and how price moved, right, went against you. From like an execution perspective, right, if you're going short, you want to be going short on the uptick, not on the downtick, right? So when you're watching price action and you're looking to click submit, you want to be clicking submit as this goes from 116.75 higher, right? So you want to be clicking it as the price goes up. If you're clicking it as the price is going down, that's where you're likely to miss those fills, because once you click submit, it's not then going to retest your entry price. So that for me would probably be the most likely reason why you guys missed those trades, is you clicked submit on the downtick instead of the uptick. But again, that's just a guess, right? It's an assumption, because I don't think, yeah, I mean, who knows? TradingView could have had issues, but I think with only 2 people having that execution problem, it's likely to be human error versus technology error. Like, I'm not trying to be a dick about that, but that would be the assumption. So like, yeah, if you're going short, you want to be selling short on the uptick. If you're going long, you want to be going long on the downtick. Yeah, I mean, I feel like I get asked this question once a month. Gold is in a sweet spot. It's moving a lot. It's at all-time highs right now. I don't feel like I need more tickers to trade. I get more than enough action. I make more than enough money. So adding something that has different trading hours than what I currently trade doesn't have that much value, or isn't very appealing. Now, guys, if we only traded NQ, right? If that was the only ticker we traded, we'd still have like 350 trades on the year. That's more than enough action. So having more tickers, having more setups doesn't necessarily mean more P&L. I'm always a believer that we should focus on better, not new. New is a distraction and it feels like it's actually going to make you more money, but it rarely does. It's just kind of like a lazy way to say, oh, it's the ticker, it's the strategy on this one. Where if you just improve your execution or your risk management or your entries or your take profits, you're probably going to feel less interested in adding more tickers to your tradable arsenal. The reality, right, is there's always going to be some hot ticker, some hot commodity, some hot future that is moving more than what we're currently trading. But I honestly don't care, right? I make more than enough trading the tickers that I trade, so I don't need more distractions. Like, if anything, I would literally remove tickers, not add tickers at the moment. Because the names that I'm trading is not my bottleneck. So same thing like I just mentioned, right? The reason why trading gold is not very appealing is because its main trading hours are different than what I currently trade. So having to then wake up at a different time and start earlier doesn't have much extra value, right? So like adding that into my quote unquote tradable universe I would have to change so much about my trading and my lifestyle that it is not an extra value add, especially when the tickers that I trade is not my bottleneck in my trading, right? It really isn't. All right, guys, any other questions here? Yeah, Andre, like I said yesterday, I will make a video about it at some point here this week. But just with me being away last week, right? I've got a lot of stuff I got to catch up on. Because Tyler, I want to get stopped out at the point where I'm wrong, not the point where my P&L hurts, right? So I set my stop loss at the high of my entry candle or the high of my confirmation candle or the high of my confirmation. So my stop loss is the point where my idea is invalidated. The point where I'm invalidated and the point where I lose $500 should be the same point. P&L is good today. Like almost $1,400. We'll call it 1349.35. So yeah, I want my P&L pain point and my idea or the point where my trade is wrong to be the same. I don't want to just have random stop losses because that then also becomes really unrepeatable. So at the very least, right, if my stop loss technique is the same. So let's say that for every single trade, I place my stop loss at the high of the big volume candle. And I do that on every single trade. And I do that for the next 100 trades. When I go back and then I study my trading, it'll be really obvious if that technique is working or if it isn't. And because I'm doing the same thing every single time, I'll be able to notice the pattern on how to avoid those fake outs much easier. Whereas if my stop loss is randomly here or here or here, then the variance basically of how that plays out is going to hide a lot of mistakes and end up slowing me down because there's no rhyme or reason to it besides 500 bucks. So I won't be able to tell if it's my entry timing that's costing me money. I won't be able to tell if it's my thesis, right, that's consistently incorrect. And I won't be able to tell if it's my stop loss location. So now I've got 3 unknowns that have literally just happened because I was too lazy to work backwards to my entry price. So we want to avoid those extra variables, right? Because all they do is elongate your learning curve. The more consistent I can be in my process, the easier it is for me to learn from those decisions, be consistent with them, and then make changes, right? Like in the last, we'll call it month now, right? Probably the last month or so, we've adjusted to trading the fake out technique more often because when I looked back on my trading in the summer, I noticed that I was getting faked out on a lot of ideas that would then run, go, and give me big follow through. But the only reason I could be confident that I knew that I was getting faked out and faked out at the same spot was because my stop loss technique is effectively the same on each and every single trade. So then that pattern sticks out like a sore thumb, and making that adjustment to then keep pushing to new all-time highs is really easy. So yeah, like protecting the P&L is really, really important, but you want to be getting out where you are wrong, not where it hurts, and then working backwards, right, to getting to your entry price so that you're buying a discount relative to that. Let's say, I'm just going to bring up my paper trader. It's going to be easy or good example to show. So let's say that I'm taking a trade, and we'll bring up the order window, and I'm looking to play a move to the downside here, right? Again, I'm not taking this trade, guys. It's purely hypothetical, right? And my reference price is here. So first thing I'm going to do is I'm going to type in my stop loss, right? And I'm going to go 583, right, as my stop loss on a short. And cool, right? If I were to buy here as is, I'd be risking 470 bucks, right? So I'm within my max loss number. If I would ever change this to that and then change my risk to be 500, untick that, and just waited for, we can go ticks, we can go risk USD, and we just made that 500 bucks. Now my stop loss is changing all over the place, right? So I'm no longer getting a very reasonable reaction. So now I can go, say, 15 contracts. And look, my stop loss is 1 point, right? So instead of getting stopped out where I want, I get stopped out where it hurts. And that's not the right thing. I want to get stopped out or be wrong at 83 because a higher high post confirmation tells me that my idea is wrong. So if I see that post confirmation, that's my reason to get out. It hitting $500 is just the byproduct of that happening. And so I don't want this stop loss price to be changing. I want that to be a constant. And it's important, right, that I'm basically just not a dumbass about that. And I control those variables a little bit better because it'll make me a lot more money long term. And ultimately, right, I'll avoid getting faked out a lot more often. Make sense? Yeah, no worries, man. It is a work in, like it's like the first week specifically is chaos. The first month is about translating the information and just putting that order of operations into the right way. Keep asking good questions. You keep participating. You keep taking those trades with us. It'll all come together. So don't worry about it. I know how chaotic the first little bit is. All right, guys. Final call for questions here. Final call for questions. You can look that up yourself. Please don't treat me like Google. All right. Any other questions? What were you thinking, Ajay? I'm not too much as a boozer, but I mean, I'll bet you dinner if you want to do that. Beautiful. So probably fairly, we should do it against the spread, right? Because Eagles are going to be pretty big favorites here. So let's figure out what the spread is and do it properly. I don't want to juice things in my advantage too much. I might be a capitalist, but I try to be fair. So now you're talking my language. Taco Bell is a fancy restaurant. You're telling me that cheesy gordita crunch isn't Michelin star? I don't know. We might have some a big divergence here in culinary palates, but that is about as good as it gets. Hell yeah, Joe. Go Birds, baby. It's like the secret menu at In and Out. All right, guys, final call here. I got to get going. Yeah, you too, Joe. We'll see you soon, buddy. A great day, guys. Great day. I think that adds us to 12 in a row or 13 in a row. It's pretty awesome. We'll keep stacking them up, right? We'll keep controlling the variables we can't control. We'll keep building up our accounts. Awesome work for a few of you guys for passing your evals in less than a week, right? To start on Friday and be past your eval by Tuesday. That's awesome, right? So just shows the power of controlling your risk, of being deliberate, of honestly not being a dumbass with your position sizing, and then everything else falls into place. So if you want that to be you, right? You want that to be who you are as a trader, focus on the variables you can control. The people here who are successful aren't successful by accident. They're successful because they're deliberate in their learning process and they're being selfish in their process, right? My job here is to show you how I fish, right? But I can't fish for you. I can't place your trades for you. I can't exit your trades for you. I can't help you set up your execution window. You got to do those things. You got to have the courage to put the line in yourself. And if you do and you get confident in that process, you will very quickly start to see the PNL turn in your favor. I would challenge everyone, right, to take that very seriously because it can be life-changing for you. And as you start to take accountability for that success, you will very quickly see how things can change and how dramatic your P&L will be. So the more that you force to slow yourself down and you start to take accountability for the things that give you anxiety in your trading, the more the compounding effect can take over and the more money you can ultimately end up making. So I would really force you guys all to embrace that mindset. And as you do, you'll quickly start to see that P&L completely move in your favor. So same deal like always, team. If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. But otherwise, looking forward to catching up with a bunch of you in our one-on-one calls here later this afternoon. And we'll chat then. So have yourselves a great day, team. And we'll talk soon.